Bless Squad, what's going on with y'all, man? It's your boy Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And we got the Rams. We just won the what's they called? We won our division. So we're going to the playoffs. We're going to see how we perform at the end of this week. We're going to see. I'm a little nervous. Hopefully we can pull it out, but we're going to see. But anyway, let's get into the video. Today I want to talk about the markets and how America is going to turn out over the next few years. Let's look at the next decade. And two things I want to look at mainly is the overall market, and I want to look at the overall economy. So getting into the market this week, the market has been absolutely terrible, and it's been on a straight decline. It's been crashing basically. And the reason why is because the Fed has been saying some scary words, some scary things that have kind of spooked the market. They've talked about tightening. They've talked about reducing the balance sheet, or not reducing it, but limiting the amount of money they are putting into the balance sheet, so that they're not going to be purchasing as many bonds as they've been doing over the past couple years since the pandemic has been going on. Also, they want to increase interest rates. They say they are going to plan to increase interest rates a couple quarter points. They didn't specify exactly how many, but I'm guessing they probably are going to try to get it up to at least maybe like 0.5% or 1% by the end of the year. And that's what spooked the markets. A lot of people are really nervous about that. A lot of companies and businesses that are taking advantage of these zero interest time periods we're in are making a lot of money. And if they were to increase this to 1%, hypothetically 1%, that's going to come out of the profits of a particular business. So the value of these businesses have to go down, and that's why we're seeing a decline in the market today, because we're analyzing and saying, oh, okay, if a company now has to pay interest, the amount of profitability is going to go down, so the price of the stock has to go down as well. And a lot of these companies are levered up. They're using a lot of debt. They've taken a lot of this pandemic money, a lot of this stimmy money, a lot of these loans and gimmies that they've gotten over the past couple years, and they've been able to push the profitability up, but they're entered into a lot of debt. So that's what we're looking at for these next companies and stuff like that. We'll see how it plays out. Do I really think that the Fed is going to get this thing all the way up to where they say it's going to? They plan on getting it? No, it's not going to be normal. We're going to take, I'm thinking we're going to take like a slight dip. They're going to slowly get interest rates up, maybe like 1%. They're going to get it all the way up to 1%. They're going to slowly decrease the balance sheet. They're going to stop buying bonds a little bit, but then they're going to realize, oh, it's messing up the economy too much. Oh, prices of stocks are going down too much. And then they're going to reverse course. They did this back in 2018 when they said, oh, we're going to raise interest rates. We're going to reduce the balance sheet, blah, blah, blah. And then they do all this talk, and then they absolutely reverse course. So that's exactly what I think is going to happen again. And we're in a worse predicament now with debt is a lot higher than it was back in 2018, 2016. 2008, all these different times, the debt has been getting higher and higher. So the ability for them to increase interest rates to 2%, what was it? The high was like 2.5%. That was the highest they got it when everybody started screaming and complaining, oh, the market's going down. So I don't think they get anywhere near 2% based on where we're at currently with just debt and all these things, how high flying these companies are currently debt wise. So my guess is I'm gonna put a number out there. We get 0.75%, and then we come right back down. They continue to print more money, but we'll see how it plays out. And I want to talk about a book that I've been reading that I really recommend that discusses economies like this. And this is the Ray Dalio book that just came out recently. It was called if I remember right, the Principles of World Order. I might not be getting the name perfectly right, but it discusses political climates like this economic climates that we're seeing today in the United States. And it specifically talks about, it mainly focuses on China, and it focuses on the United States. And what it talked about was the rise and fall of different empires. So we're looking at the United States, for example. You see the at the beginning, you see the increase. We steadily go up. We become the number one power in the world. Everybody looks at us as the number one power, and then you hit the slow decline. And what Ray Dalio did, it was genius how he did it. He went back in history and he looked at all the different occurrences of a rise and fall of an empire, and he was able to break it down into 6 steps. The first step would be the beginning. The second step, it begins to rise. Third would be the peak. Fourth, it starts to slowly decline. Fifth, it really declines. And sixth is when it completely dies out. And he was able to break down, okay, what are similar to each historic decline, and what can we look at to see, okay, what are signs that we can look at to see when a empire is going to decline. And what he was able to find at the beginning, you have a lot of strong principles at the beginning. The leaders are able to manage money very well. It's also followed by strong education, followed by strong military. It's followed by a lot of strong things at the beginning. And then when we get toward the end, we have the education begins to decline. We have a lot of debt. They're not able to manage their money really well. And a lot of political issues begin to come onto the scene in these particular civilizations. And that's exactly what we're seeing today in America. So it was kind of a scary book if you're reading through it, because you're just sitting there and looking at the laws of human nature, and you see it every single time. He goes through civilization to civilization, to country to empire, and you just go one after another. The cycle just continues. The story repeats itself over and over and over again. And you think to yourself, are humans going to learn? Are we really going to understand that this goes like this, and we just need to keep on this path, handle the principles that kept an economy strong, and not veer off into what allowed other civilizations and empires to decline? And you look at it and you say, you guess not, because that is what's currently happening in the United States. He said in the book, we are basically at the 5th stage. The stage number 6 is where you have an absolute decline of the economy. We lose a lot of things. And when you're looking at it, we're at stage 5. We have a $29 trillion debt. We have a big divide between the rich and the poor. That was one thing he just talked about in stage 4 and 5, a big gap between the rich and the poor. And then we also are starting to have a lot of political issues, a lot of civil issues battling between ourselves. And those 3 things become the mixture for what can cause a new regime to come into power. What she talked about, China coming into power and ended up taking over America potentially. And that's exactly what would repeat over and over and over. It would be one empire takes another, and then just repeats the cycle, continues on and on. And that is a concerning thing for me, because if you're looking at it, it's a concerning thing, and also it's a thing that you need to look at if you wanted to protect your money, to see if you can make some money off of this. Because if you're looking at the trends of the United States, you say, okay, we're on the decline. Based on history, we can't tell the future, but based on history, every single time it turns out this way. So what can we do to protect ourselves if the next 20 years, next 10, 20 years ends up being a situation where America loses its number 1 reserve status? It's no longer the number 1 nation in the world. And we do have a decline, and another country, China, in this standpoint, or maybe Russia, or whatever main power, strong power. The main power that we're looking at in the book was China, because it's just one of those powerful nations that's really shown itself to be at the top of the leaderboard, but let's say China ends up taking over and becomes the #1 power. What is the play for investors at that point? So that was a very interesting book, just to see, okay, the rise and fall of empires, and we see the Federal Reserve just having the same play that all other empires had in the past, where they're just trying to keep everything together. We will see what they do. Will we have a change in our government? Will we have a change in the economy where they're able to get the thing turned around? I don't think so. So what we need to do is plan for the game plan of a potential loss of America as the #1 power in the world, and see where it gets us. So those are things to think about. I do recommend people go check that book out, because it was very interesting. He was talking a lot about how the percentage odds of civil wars, how the transitional power can be more civil war, or it can be a more peaceful transition, and he was giving the odds of that. But we will see. We're going to be seeing. We're going to be able to watch it firsthand, and I'm going to keep y'all updated what's going on with the Fed, with the markets, and also the geopolitical look of it, of how everything looks. So let me know down in the comments down below. Are you nervous about maybe a potential decline in the dollar, potential decline in the United States? Have you read the book Ray Dalio just put out? Because it was really interesting to see his perspective on that. Let me know in the comment section down below, and we can chop it up. And what are you doing to protect yourself against this the new changes that the Fed are making when they begin to increase the interest rates? Let me know in the comments. But that's going to wrap it up. It's me, your boy. Blessed applesauce, stay blessed. See y'all next time on Blessed to Invest. When I see y'all next, we need a Rams win. I'm out.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.